Have you ever noticed how people start talking about which altcoins to buy right before the market peaks and then slams everyone back down to reality? Now, this can be short-term or long-term. It can be large corrections or smaller corrections like we're seeing with ETH, something larger like we're seeing on XRP. In the last 24 hours, nearly $1 billion of longs have been liquidated. And then when you add up longs and shorts, that's over $1 billion. Now, that's not a coincidence. That's what happens when retail gets lured in at the top, thinking it's a one-way streak right to financial freedom. By the time your coworker or cousin asks you which altcoin to ape into, the move has already happened. Committed short-term traders and long-term investors watch market sentiment, not just the charts. And when everyone suddenly wants into the market with greed and extreme greed piling up day after day, that's not an entry signal. That's an exit signal. That's your exit bell, one of the best indicators you can find in the markets. So today, let's take a look at what the markets are doing as they are beginning to retest where retail entered, along with traditional finance to give us a healthy overview of the markets overall and commodities. So Bitcoin is at $116,000. It has tested $115,000, taking us right into where retail arrived back on the 10th and 11th of July. This was a huge uptick that we saw on social media, views, subscribers, and we also saw a significant uptick on the ETF inflows. You can take a look at the 10th and the 11th, pretty much some of the largest days that you've ever seen in history coming into the markets. Now, these also coincide with other areas that we've pointed out on the chart, basically where retail has arrived. And it doesn't mean that they come in at the exact top, and it doesn't mean that they have to only ever come in at the all-time high prices. But typically, what we have seen as we compare the price charts along with the ETF inflows and, of course, market sentiment, we often see these periods of the market coinciding with areas that price slows down. Now, I've alluded to the fact that this hasn't turned over yet. We haven't seen a change in trend from a bull market to a bear market. I don't think that's the case. That's what we've been talking about now for many, many months, if not years on the channel, going back to the beginning of the cycle. But in more recent times, there's been a lot of talk about every time Bitcoin hits a new fresh all-time high, that it is the end of the cycle. And just to ease some of the concerns, even though we're seeing the prices head down, like we looked at with Bitcoin now down roughly 6%, other cryptos like ETH, 9% in a total correction, and for XRP, now down 19% in a total correction, we still haven't seen any signs that the trend, the macro trend has changed. The short-term trend, sure, we are breaking some of these lows. But if we take a look at the 50% levels, basically the strength and the weakness in the market, these come in roughly around 99 to 100,000, plus the support and resistance level about 110 to the top here at about 112,000. So we haven't touched those, nor has the market closed beneath those levels. That's going to be another 5 to 15% away from the market. And to get confirmation of a long-term change in trend, you forego some of the profits, meaning you forego some of the move to the upside. It's the only way that you can identify when you've got a macro change in trend. Short-term change in trend, you can see it much, much closer to the top, but then that leads to false signals if you're trying to call for a long-term change in trend. So you can see the top here, 123, and so far haven't even broke down any of those previous levels. Now, the significant level is the 7-year resistance line, which Bitcoin has tested and broken above, now consolidated so far above that level, but down to 110, 112 is still looking relatively safe, all things considered, because it also lines up with the 50% level of the move up from the 22nd of June to the current all-time high price. So even if the market saw, in case of Bitcoin, saw a correction back, say 10% to about 111,000, right in between 110 and 112, you're still pretty strong, but you'd want to see a wick down and then weekly closes above that 7-year resistance level, which, depending on the time that the weekly close comes in, each of those weeks moving forward, you're looking at a price roughly around $116,500 to get that close back above that level. The time counts towards the end of the cycle are still looking on track. As I said, no significant breakdowns yet. Therefore, we have to assume that the bull market is still on. Those tops, 35 months through to 37 months, take us somewhere around October through to December. And if we happen to get a slight extension on this cycle compared to previous cycles, because we're in this final wave of the 18-year cycle, things can go a little crazy, like we've talked about with commodities. And we're seeing that with many commodities like silver and copper hitting new fresh 14-year highs day after day at the moment. And for copper, new all-time highs. These are in the commodity space. We may expect a longer move here for Bitcoin leading out into Q1 of 2026. But of course, we've got to take this thing day by day. We don't want to get our hopes set on a longer cycle if the conditions change. For now, conditions remain bullish, yet we are seeing short-term pullbacks. And we're seeing that across the board as well. Total crypto market cap did hit a new all-time high this week. However, we're having a pullback yet again, but we're above significant levels here. So total crypto market cap down 5% from the high. The next support levels to the downside, roughly around 13% away. I'm looking at about $3.4 trillion for the overall market cap. Provided they stay up where they are, well then the structure remains. The structure remains bullish. Otherwise, we get a breakdown of these levels, then you got to get a little concerned here. So 3.4 is a 13% correction, somewhere around the previous tops, but the 50% is the pretty significant level, in my opinion, and the previous all-time high. So you're looking somewhere around 3.5, 3.6. It can pull back into these levels with a wick, but you want to see closes above 3.5, 3.6 trillion dollars. Now, if you want to see how we're trading the markets through these periods, the short term, the long term, TIA Premium is the place to go. There is a sale on for the next 24 hours. Not only are you going to be able to remove the uncertainty and the indecision in the markets, you're going to be able to put your plan together so you know what you're doing with your trades in the short term and for your long term investing. There's also a very genuine community of active traders, quite supportive, something that you don't often see. I often see out there people trying to take each other down, but in this case, our traders are doing very well, all supporting each other and then helping each other out with any issues that they may see as well. And this goes for the short term and for the long term. You can check it out for yourself. Link is in the top of the video description under free report. Drop your email there and you will be notified when the sale is on. Speaking of altcoins and trading, we're looking at the USDT dominance. This is on the climb, which of course is in direct correlation to Bitcoin and altcoins falling. The money is flowing into USDT. Where could this end is another important or interesting question that I like to look at. And first level is, to me, the breakdown. So 4.4% has been a key level that we were watching for a breakdown before the market got quite interesting. People got excited. It was through these days here, 10th and the 11th of July. That's when they all started to rush back talking about different altcoins. Now we're finding that the USDT dominance is climbing again, roughly 4.37, getting close to that 4.4. And I'll even raise it a touch here to about 4.5. And then you've got a couple of levels above. So there's a bit of resistance, which is a good sign. Even if it does get going and push a little higher here to scare out the market, we do have resistance overhead. So that's what I do like to see. Get the resistance and then start to fall again. The warning on this, not that we have to worry about it this moment, is if the USDT dominance remains between 3.7 and the upper levels, the upper resistance around 4.5%, then we're probably going to see tougher times for altcoins. You're not going to see them all start to pop off. It's going to be basically the strong stuff, or Bitcoin, maybe just the top few, Bitcoin, ETH, XRP, because that would mean if the USDT dominance remains in here, there's only so much USDT to go around. But I suspect if it breaks 3.7%, this bottom line here, this white line, then there's going to be a lot more USDT to go around. So if it's basically stuck in a trading range, it's going to be tougher times on trading. Going to be far more important that you know where your levels are to get in to the market, get out for a profit, or get out with a stop loss. As I said, you got TI Premium there if you need some assistance there. Okay, so USDT dominance with USDT and USDC, similar sort of pattern here, except on the 7-year line, rising again. Support around 6.3%, and overall with the combined stablecoins, again, need to see this breakdown from about 5.7% once this rally finishes, and hopefully we move into a lower low from this low. So everything's still relatively on track here with the data. We're still seeing more income come into the game, or more money come into the exchanges. Hopefully it's income for you if you're trading the markets. You've got $76 billion on the 7-day moving average, so it's still climbing, broken the highs, and aiming for this next high here at about $78 billion. It's a similar sort of pattern that we've seen throughout the previous move, where it consolidated and then started to break higher. Whereas this time, it seems like it's a good slow grind rather than just a quick boom higher. We don't like to see these big blow-off moves because, well, essentially it runs out of energy far too quick. Now, the sentiment is also cooling off. The longer term sentiment is okay. It continues to run higher, but in the short term, we're seeing it cool off. Red is Bitcoin, blue is crypto, and in the short term, looking at the 90 days, you can see how it's peaked already. Bitcoin peaked back on the 14th, and the dates that I keep referring to, the 11th of July, was really when retail started to rush in, and now you're seeing it cool off again. So although the search volume is cooling off, and I believe it is still very, very relevant, it has not given us a reason not to use it. You can see how the market is also cooling off. The prices are coming back. Similar thing here for altcoins. So this is the altcoin search term, rising to one of the highest levels now in the last 12 months. But if you look at it on a 90-day, you can see the pullback happened. So Bitcoin had that breakout with retail on the 11th. You can see it started to peak here for altcoins. There was more interest coming in, and that lasted about 10 days after the Bitcoin breakout in sentiment, and now has begun to pull back for the last 4 or 5 days. We're seeing the same thing with the fear and greed index. We've hit greed multiple times over. Again, the positive, even though we're seeing like short-term signs of pullbacks here, the positive is we haven't gotten too overextended. It's just been greed peeking its head into extreme greed only a handful of times. So it really hasn't blown up too much, and that's essentially what we want to keep seeing if we're going to get any sort of continuation in the long term. Just the short term getting overheated time and time again, and then you start to see the market come down. As I'm filming it, it's still coming down to new fresh lows and has taken out the 15th of July. Now very much in the bar, or the candle here, of the 10th and the 11th of July. So you keep seeing we come back to those dates, because that was where you saw the influx of ETFs, essentially a lot of retail interest, and smart money can also be there in there as well. Basically your larger funds as well. It's not just a dig at small money. You have to have a lot of money getting in at the wrong times as well. So that's the market sentiment. In terms of the traditional finance, as we'll cover this quite quickly, you got extreme greed. The markets are still climbing higher day after day. S&P 500, new all-time high, new all-time high. You guessed it, new all-time high. And the market hasn't even opened today. This is a 24-hour market. We've hit another new all-time high. Consolidation is now looking like it is climbing higher in not necessarily a square pattern, rectangle pattern, but basically grinding higher with the odd flush out to the downside and then pops higher, keeps climbing and climbing. Same thing for the NASDAQ, higher and higher prices. The narrative, of course, seems to be AI, keeps pushing these markets higher, seeing new all-time high prices for Nvidia, high prices for Microsoft, Apple, so on. So there's no slowdown here for the stock markets. I suspect it's going to continue eventually to follow through, but it's just that we've gotten a little overheated here for Bitcoin and, of course, altcoins. It generally happens time and time again, but we're getting much, much closer now to the ends of the cycles. Maybe there's 2 or 3 months, maybe there's 5 or 6 months, but that's a lot different to where we were, 2.5 years ago. So we're coming right into that end move. Lots and lots of excitement. Commodities also up. We've got a new fresh high here for silver. And in the case of the economy, when we look at things like copper, that also got a new fresh all-time high price. Maybe a slight slowdown in the last 24 hours, even though we hit the high, just a small pullback there. So I'm not overly concerned here for the rest of the market. And for S&P 500 against BTC, these white areas show the signs of the S&P taking off. That's in the green, and then Bitcoin generally following suit and typically tops out before the S&P tops out. So although I still see further upside, or the markets is suggesting further upside, we're seeing that for the S&P, seeing it for the NASDAQ. Eventually, the whole game runs out. You know, the whole show is off. But for now, there's still signs that the market is heading higher. Timeframes in a shorter term sense, we looked at the monthly here, down to the weekly, about 5 weeks out for our first target, 5 to 6 weeks, I should say, somewhere around late August to early September. But the next time target that is coming into focus for me is the one coming in somewhere around November, December. So these time targets have been taken from each of the previous cycles. The starting point is from the significant correction. So we've got this significant correction into the low. That was about 30 odd %. So quite significant for these market movements. And from those significant lows, the time frame out to the top in the last cycle was 20 weeks. The cycle before that in 2017, 22 weeks. And the cycle before that, 21 weeks, with the second count that I'm watching here, roughly 32 weeks. So to me, they're all quite interesting because of the pattern leading into the cycle. There really weren't any more checks for buyers and sellers. It was just almost all buying as you run into the peak, with basically a 2-week pullback at the most, 1-week pullback, and then running into that high. Like 2021, you have a few weeks here, 1 week, reversal 1 week, so call it 3 weeks in total, but then really just 1 week before you got to that all-time high. So the pullbacks definitely begin to shorten, and that is what draws more and more people in to the market towards the peak. Total 3, also having a pullback here. So this is the altcoin market excluding Bitcoin and ETH, still in a strong part of our 50%, above 900 billion, even after these 2 days down. And the percentage move, 11% so far from this top, provided it remains above 900 billion, pretty much going to stay in that strong half of the 50% of the decline. The others tool also, or others chart has also had a significant decline here, 9% from the highs. But as we've talked about, looking at this, putting in a higher low, if the altcoins are going to make it further, it must put in a higher low here. This goes lower than the low here at 6.8%. It's not going to be a very fun alt season. How do we know that? Well, there's a lot of overhead resistance. It hasn't happened. I'm just saying that if this thing does fall beneath those levels, you've got resistance at 7.5 again to get above, 7.8, then the top's at 8, then the next top's at 9, so on and so forth. So that it would just create further selling pressure when the market does climb up there. But for now, could just be a nice quick pullback. Would look anywhere down to about 7.2% for a nice base, if the base hasn't already come in, before it starts to work its way higher. And for ETH, definitely holding up stronger than a lot of the other alts at this point. Just a 9% move in the last few days. We did not see a 3-bar down rule. If you're interested in that, definitely check out TI Premium to add these into your trading plan long-term and short-term. Those rules are the ones that helped us call the tops for Bitcoin around here. You've got 3 bars down. That was from the December high and also the March high. So that's what we're doing with these rules for our trading plans to help us stay safer in the markets. Okay, so ETH, a small correction here. And as we add on the tools, 50% comes in at 3,000. So a little way from that at this point, still 16%, and the major 50% there. So 16 to 20% from the current price would still have it in a strong position, and the structure wouldn't have changed from that point. It'd be a significant decline. It'd have to do a lot more work to get back to those highs, but it's still in the strong half of the tool. Same deal here for XRP. Even though it's had a much more significant decline, it did have a much more significant pump, at least in a couple of those volatile days where retail started to come back. 10th, 11th, breakouts, big moves. I suspect there'll also be a volume in there, and there it is on the 11th. And then again at the top here, this large day, huge volume, reversal, and then it just couldn't push higher. So it just needs some more time to consolidate the gains so far from the low at $1.90. 280 is the 50%, and 260 is the next support level after that. So wicks down, closes above 280. I think you're still in a pretty good place here with XRP, and SUI coming in at $3.60, also in a relatively safe space, being above this 50% at 330 and 290. Now, Solana continues to be the weakest out of these few altcoins that we continue to cover on the channel. Huge volume to the upside in these last 2 days when everyone was getting super excited about altcoins, now being met with 3 days down, lower highs, lower lows, but it's not from a significant high, like an all-time high. The only significance, or the pretty extreme significance here, is that it's failed at the 50%. So Solana must now hold above $150. Breakdowns of these levels are going to be pretty dire for Solana in the moves ahead. If it is able to hold, it's still likely going to be weak compared to the other alts. It'll make gains, but it'll probably be weak because it hasn't broken past its 50%. You can see the 50% here, and when you check the other altcoins against their Bitcoin charts, they've been able to take out their 50% levels. In the case of SUI, it's still just holding around that 50% level of the move up. Barely hanging on here, but still much closer to that 50% and has tested it a couple of times. So something very much to pay attention to moving forward into the rest of this cycle. Just how strong some of those alts are going to come down to where they are positioned against their Bitcoin pairing. The sale is on for the next 24 hours, link in the video description. I'll be back with another video as soon as I can. Otherwise, I'll be out surfing here in the MentorWise. I hope you guys have a fantastic weekend, and I look forward to hearing from you in the comments section. All right, guys, take care and peace out.